Hey guys, what is up? Faz here. In this video, I will teach you a simple ICT silver bullet hack that you can use right now. You don't have to use anything else. There's this secret thing that I know, and I'm going to teach you that secret little thing. And trust me, it works wonders, guys. Okay, so let me get on with the rules. So number one rule, as you know, we are only going to trade the London silver bullet time. Okay, and the New York silver bullet time. We are not going to trade the PM session. So here are the timings. Okay, we are only going to look for the setup after 3. Okay, so in between 3 a.m. and 4 a.m. New York time and 10 a.m. 11 a.m. New York time. So this is your window period. Okay, you're going to look for the setup that I'm going to teach you in this video between these timings. So you could either find the setup between 3 a.m. and 4 a.m. or 10 a.m. and 11 a.m. New York time. So as you know, a lot of people teach you that you take your entry from the fair value gap during the silver bullet timings and that it works, but I have found a better way. Okay, and trust me, it works. I have back tested, I have forward tested, and it works. So before we even move on, if you can hit that subscribe button, that would be great. Anyways, so here is the second rule. So after, let's say the London session kills on silver bullet timings start. So after 3 a.m., look for the first fair value gap. So the first fair value gap that is formed after 3 a.m., you have to put your focus on that first fair value gap. Remember, we are not going to trade by its own. We are not going to trade the fair value gap by its own. Okay, so after 3 a.m., look for the first fair value gap that is formed. Once you have identified the fair value gap, now here is the key, guys. You see if there is BPR as well in that first fair value gap in alignment with it. If you see there is BPR in alignment, alignment. Okay, never mind. I don't want to correct it. In that first fair value gap. Okay, so when that first fair value gap is formed, it must have BPR. And if you don't know what is a BPR, it is basically a old fair value gap that was not respected. So let's say this is price is going down and then price gets a displacement like that. Okay, and it goes up right that. So this is the old fair value gap and this is the new fair value gap. Okay, so let me mark out the old fair value gap is this right here, and this is the new fair value gap. Cool. If any portion of this is in alignment or it's inside this fair value gap, then that fair value gap becomes, in my words, I would call that FVGBPR. Okay, fair value gap balance price range, just to make things easier. So if the old fair value gap is right here and that there's a new fair value gap in the opposite direction, right? So this is going down, this is going up. So we have the fair value gap in the opposite direction, right? And when you have the old fair value gap in alignment with the new fair value gap, that is called balanced price range. And now simply in between these timings, you look for your entry. Don't get me wrong, it's not that easy. I'm going to explain to you I'm going to show you a couple of examples, and that is when the thing's going to get cleared. Okay, so you simply take your entry, go for 1 to 2, and that is all, guys. You do not look at anything else. Okay, do not look at anything else. There's one thing, you are going to find only like 4 to 5 setups per week, and I recommend these pairs: Euro USD, GBP USD, NAS and assets as well, NAS 100 and S&P 500, E-mini S&P, right? This is, I want you guys to trade this. Don't trade anything else. If you trade anything else and then come here and complain, I'm not going to listen to you. Trade this, okay? It doesn't work with anything else. Like, I haven't tested it. I have tested with these, so I know it works with them. So here's the strategy, guys. I'm going to give you guys a couple of examples, and then I'll end the video. Before I show you the examples, if you want to join my community, you can join it for $97 only. When you join, you get the SMC basics. So I teach every single SMC basic that's out there, market structure and all that stuff, auto blocks, fair gap. Then we have the trading strategies right here. So I have, a lot of strategy with the examples, and I explain each strategy in detail right here. And then we have the endgame section where I post my monthly updates. So you're gonna get videos forever. Like, this is all the stuff, and these two, trust me, if you watch this, it's game over for all the other traders. A couple of people passed the challenges as well and whatnot, but I don't want to waste your time, and it is not necessary to buy the course. I'm just putting it out there. Okay. And you also get Discord server, private Discord server, where I share my own trades, basically signals. Okay. So let me move on to the examples. All right, guys. So here is the example number 1. Before we move, I want to give you guys the indicators that are going to identify the BPR and the first fair value gap of the silver bullet session. Okay, so you go to the indicators tab, you type in ICT silver bullet, right? And you want to choose this by MALK1903. And what it's going to do, it's going to annotate the first fair value gap that is formed during the ICT silver bullet session. Okay, so one more thing, you want to be on the 5-minute time frame for this strategy. Okay, I do not recommend going below the 5-minute. And the second indicator is BPR by trade for op. You click on that and it's going to show you BPR. So this red, okay, this red and green boxes, green box is a bullish BPR and a red box is a bearish. Okay, so if you get a red BPR, that means that this is a bearish BPR, so you can expect the prices to go down when it comes back here. Okay, so I'm looking at, so this is when at 3 the sorry guys, the London session, silver bullet session starts, right? So now we're going to look for a fair value gap that forms, and as you can see, the second indicator, the ICT silver bullet indicator, it shows that this is the first fair value gap, okay, that is formed after 3. Okay, and you have this dark blue color, and also you will have a yellow color. So a dark blue color, right, is a bearish fair value gap, and a yellow box is a bullish. Okay, so in this case what we have is a bearish fair value gap, and also over here, as you can see, we have this BPR, and in the live market it's going to print right there, but as you can see, this red box right here, that is a bearish BPR, and this dark blue is a fair value gap, a bearish fair value gap. And as you can see, this red box is inside this this dark blue box. So FVG plus BPR, FVG BPR, if that makes sense. So now what we're going to do is simply take our entry from this fair value gap, right? Because this is the first fair value gap, and this first fair value gap has a BPR. Okay, now we simply take our entry, we put our stop at the high here, okay, and we go for 1 to 2, and let's see how this plays out. Where did we get our entry? At 330, actually 330, yeah. And look at that, take profit hit. It did not take out the high right there. Perfect. So yeah, that was one of the many examples that actually you can find them. Just go on the charts and look, and you're gonna be shocked. Okay, yeah, let me give you guys a couple of more examples. All right, guys, so in this example, this is for the New York silver bullet session. So as you can see, at 10:05 we have our session started, and this is the first fair value gap that is formed after 10. That is annotated by this blue box right here. Okay, blue box means bearish fair value gap, and this right here is our BPR, annotated by this red line here, this red box here. So that is the first fair value gap of the silver bullet session, and also that first fair value gap has a BPR. Note that the BPR has to be bearish as well. So let's say you get a bearish fair value gap, the BPR has to be bearish as well. Okay, so simply you would take your entry from the fair value gap, you put your stop at the high here or maybe somewhere here, but I recommend going there, go for 1 to 2, and you are out of the trade. Very simple, guys. You don't need anything, no daily bias, nothing. Okay, just stick to this. I'm telling you, you're gonna be amazed at the precision of this. Let me give you guys one last example, and then I'll end the video. All right, guys, so here is the last example. I'm looking at NAS 100, and as you can see, this is when at 10, you can see this is when the New York silver bullet session starts, and this is the first fair value gap annotated by the indicator. As you can see, 10 right here, yellow box, and then we also have this green box inside, which is BPR in alignment with the fair value gap, and that for us is a go-to sign that we can go long here. Okay, so now I would simply go long here and put my stop right below this low here, because this is the first candle of the fair value gap and this is the low, and I would go for 1 to 2, and let's see how this plays out. And right there you can see our take profit was hit. 1 to 2, we always go for 1 to 2. You can go for 1 to 1.5 as well. And one good rule of thumb is to always go break even when 1 to 1 is hit. Okay, so yeah, guys, I hope you guys did enjoy this video. If you want to add more confluences, you can of course use that. You can look for, you know, the opposite side liquidity and whatnot. And one more thing you should try to amplify in this strategy is, let's say your entry is here, right? You look at the liquidity, right? So let's say if you're going along, you look at the buy side, the closest buy side. If it is giving you at least 1 to 1, then you should take that trade. If it's giving you below 1 to 1, then maybe it's best to avoid that. Anyways, I hope you guys did enjoy this video. I'll see you guys in the next one. Goodbye. Okay, I think we're getting used to it.